Business is done through and with people. I truly, truly believe that. So it's the people component first. When folks ask what your favorite part is about whatever it is you're doing, and it's cheesy, and sometimes I get an eye roll, but it is the people.
Hey everyone, welcome back to the Harder Working Money Podcasts. I'm Brian O'Neill, and I'm here today with Nathalie de Vos Burchart. Hey Nathalie, welcome to the show. I appreciate you joining us.
Thanks, Brian. Thanks for having me on.
No problem. So Nathalie is down in Texas, and she owns or is in ownership in almost 3,500 plus unit. I believe somewhere around 11 or 1,200 as a GP, and the rest is LPs. Backstory: I'll just give you a quick backstory on Nathalie. She's a engineer in the oil and gas industry originally. I think you got your master's degree. You went to work for ExxonMobil, and then you were a VP in, I can't say the name right, but Biourja Trading.
Biourja Trading.
Yeah. And then made the jump over to multifamily and has a pretty good portfolio. And we know each other, interestingly, from a mastermind group, the Sunrock Mastermind. And just one little comment that I always find interesting is you never know who you're talking to or sitting to in some of these groups. There's the people that get on stage and the people that will be within 2 minutes tell you exactly how big and awesome they are and all the units they have. And then you run to people like Nathalie that you have no idea that she is like a heavyweight powerhouse, over 1,000 units GP, and been doing this for a while because she doesn't flaunt it. I think my wife talked about kids and stuff all the time. And it's always an interesting room. It's sort of a humbling room because everyone is just kind of doing awesome, I guess you would say. I'm used to being the person that's sort of, I feel myself equivalent to a room I'm in, and now it's like, wow, I'm like the small dog in this room. So it's really neat to meet people like you and be able to talk to you. So thanks for taking the time to join us.
Yeah, it sounds like you're putting yourself in the right rooms.
Yeah, for sure. So for apartments, I was kind of going through your portfolio real quick, and I saw you had a lot of Class C apartments in your portfolio. And I was just curious how they've performed over the time. If you continue to do them, what your philosophy was first getting into Class C, and if you can explain to listeners, our listeners many times will be newer to the multifamily investing, what even Class C is.
Oh, so you got several questions in there. Well, we'll start with the definition for Class C. A class of apartments is typically defined by its age, the location of the asset, and the demographics of the residents. And it could be that a few of those are Class B or higher level, but C would typically be a 60s or 70s built property. In an older area, you might have a lower median income, 40, 50,000 a year, and that's maybe moving up now with inflation and wage pressures. But yeah, your demographics are working class. And then the reason for Class C's in my portfolio, typically that's been the most readily available in some of the markets where I've concentrated on. So there's availability, the broker connections and listings that have come out. I could also say I like to do the extra work for the returns. Not that I'm a glutton for punishment, but there is extra work and risk that comes with Class C. Thankfully, my portfolio, or the Class C apartments that I've had for a while. So we've, for the most part, executed the business plan, increased the value on those. So their performance, while the valuations have come down slightly in the last year, the overall returns have more or less been achieved at or above pro forma. Fast forward to today, or the last year and a half or so, I'm not acquiring more Class C's because of that risk and work associated with them. So trying to high grade my time and the average year of construction, if you want to boil it down to that, of the properties in my portfolio.
So what's some war stories of the risk and the work involved in a Class C? And I'm probably the same the same type of person. And last two houses I personally bought for myself, I buy the one the realtor can't sell, and then for some reason I'm attracted to the, the house that the old grandma lady painted pink and has, bad hardwood floors, because I see the bones in it and what I can do with it. But it definitely adds to the workload. So sorry, I interrupted you. You're going to tell us some of the war stories for Class C.
No. I mean, it's great that you relate to components, and I think that's why you do podcasts. It's for people to recognize themselves in some of the character traits or things that folks do. And some folks are driven by the challenge and that opportunity and carrying out what they're seeing as their vision. War stories, I mean, not that I've had an entire roof collapse, but major roof leaks, main line breaks. So we're talking about the main water line coming into a property, breaking, and having your residents being without water and under the pressure to get that fixed. And that's just aging infrastructure of these deals. So you have to go into them with your eyes wide open, well capitalized, and with the experience of being ready to address ahead of time what potential issues you can have. I mean, we jet these galvanized main lines. We jet them on a quarterly basis at a 1965 property we have, and this property's great. I just wish it wasn't so old, because you're fighting entropy and decay every day, whether it's a Class A, B, or C. I mean, it's a property. It's being beaten down by sun, weather, etc., and you're fighting those elements and time
and people
to keep it.
They can only stand so many door slams until the door breaks off its hinges, and after 70 years of it, things start to just wear out. They can't take it anymore.
I mean, I have two kids, and kids can do a lot of
the amount of baseboards I've replaced in this house we just bought already. They ride around my house on these scooters and they just clip off the baseboards, and it's like in a few years this place is going to look like a roller rink.
Yeah, no. And if you're lucky enough to have some kind of like good size loop on your main floor that they can just go around, I mean, we've got a ladybug on wheels, and I have to make sure that the dishwasher's not open so they don't like hit it on the way around the corner. Yeah,
our kids just zoom back and forth in our main living room to our dining room to our master bedroom, because we just moved in and all the furniture is in here, so it's just a big open spot.
Congratulations on your recent move. That's exciting. It's one of those big life events, so able to
the bigger house for the kids, basically. How about clientele and residences in C? Is that more of a headache, or is that more the property manager's concern? You're more worried about the asset?
Well, the property manager's concerns are your concerns. So you don't, there's it's not like it goes away because you have a property management company. So those residents are your customers. Those are the people that you're working to serve, and you're going to have naturally more delinquency, more turnover in a Class C because of the demographics. There's, I don't say more transients, but that's just been my experience. It doesn't mean that you can't work with them and work through it. It's just being more on top of it. You can't be behind or lazy about not putting out the notices and filing for eviction, because you're running a business. When you buy an apartment complex, you've bought a business. You're looking to run it as efficiently as possible, and when you've got delinquency and renters that aren't paying, you've got to take the appropriate steps. It feels harsh when you first start it, but those are the rules of the business, and so there are going to be more evictions with Class C typically.
But that's all. But that, to the listeners, is factored into the property and how it functions,
yes,
and what you pay for it when you buy it and sell it. So it's not the risk isn't offset.
So when you're underwriting, you've got your physical occupancy, and then you've got what's called an economic occupancy, which is what you're actually collecting in terms of your gross potential rent. Your gross potential rent is assuming all the units are occupied and paying full market rent, and then how close you are to that number.
Okay, so you started in Class C, and now you are continuing Class C. You're going to go to B. If you changed? Is there a reason?
No. My last one was a really big deal in Houston. It was 5-6 minutes away from where we used to live. We moved to North DFW about a little less than 2 years ago. So a market I'm very familiar with, and it's a 2008 construction, Class A. So very different from the older Cs, and that's where I prefer to be now is newer assets. Partly because I'm able to do bigger deals now. So Class Cs, that's where you, for the most part, when people get into the apartment business, that's where you start, because it's a lower ticket price per door, if you will, or more accessible, and then you work your way up to a larger. In the case of this Houston deal, it was over $60 million and a $26 million raise.
Is it also broker relationships? It's harder to get a non-Class C when you first start, or is it really just the money side of it?
It's both. It's both.
Got it.
Yeah.
They also want to kind of see how you do on a C, maybe, before you move up to a or a B. So how are the Cs performing previously and now? And how do you think they're going to perform going forward?
I wish I had a crystal
Obviously.
ball that was accurate.
If you're creating a budget or underwriting today.
So this advice is worth what you're paying for it? No, I'm kidding. My guess is, we're going into, or we're already in, a recession. And I think Class A and C are going to be affected by the recession. To what extent, I don't have a crystal ball. But between Class A and C, I would prefer to be on the
And
A
why is
side going into this. Because I think, the lower economic bracket, you can argue both. So I do think people are going to be losing jobs, whether they're going to be the high-paying jobs or the lower ones. I don't know, but I also think there's going to, if you can't afford your rent, which is going to be a lot of the Class C residents, you're going to combine households and reduce the effective number of net renters. So that's,
I guess, the pressure on Class.
And maybe that pressure is across.
I guess the counter argument is the pressure on Class A is people can downgrade out of their expensive apartment to save money, and no one's building more Class C, but they are building more Class A. So that, I guess, is a pressure as well.
Yeah, but then every class has a range, right? You have the brand new construction that's under lease up or still being built, and then you have the stuff that's already been around for 10 or 15 years.
I saw that you're invested in Oklahoma. Oklahoma's always curious to me. Is that like the future new Texas, or is it a completely different market?
So I can go through the thing,
The thought process? Okay.
Sequence of events that, yes. So apartment deals happen through and with people. So that's the first thing. And the first group of folks that I started connecting with, and we decided to go after our first deal. It was their first deal, it was my first deal. All of us were new and going to do our first deal, and they happened to be based in Oklahoma. So we were doing due diligence in Oklahoma, and this was back in early 2016. I started in 2015, but and was doing due diligence, late 2015, early 2016, and started going out and looking at deals. And when I started doing apartments, I felt like it was near the end of the market. Like the markets like Dallas were overheated, and I needed to diversify outside of these primary markets on assets that were more of a yield play, steady cash flow, not the huge upside type of thing. And my thinking was wrong at the time, but I didn't know that. So I was going for geographic diversification, and it took us several different deals and due diligencing in Oklahoma before we did our first 3 property portfolio in Oklahoma. And then we built on that in that it was relationship based on the property management company, and that property management company at the time that we were working with was based out of Arkansas, and they started bringing us deals that they would either know of because they were managing or know of because they were in that market and actually secured under an LOI and would pass that LOI on type of thing. So again, relationship based. So that's how a lot of those first deals happened, with the relationship with Tariq and Ivan in Oklahoma, and then the property management company that we were working with at the time, Trinity, based in Arkansas. So we did deals in Oklahoma and Arkansas, because once you get traction in a given market, then you are able to build on that because there's
Okay.
momentum.
Yeah, that was my next question was, okay, is Arkansas, why Arkansas? So it was like, it was a connection, and you had people that could manage there or bringing you those deals. So might as well. Got it. Okay.
Yep.
So
Yep.
like, what's your primary role? Do you help raise money? Are you focused on CapEx and the property fixing it? Is asset management, everything?
It depends. I hate that answer, and I'm giving you that answer. It depends. It depends because it depends on the deal. It depends on all of the people coming together and who plays what role. I can do any of them because I have my own properties that I own individually, and have to do all those roles because there's nobody else to turn to. So I have the capacity to do all of them. I don't need to, so I'm flexible. The part I enjoy the most is the people part, working with investors. It bothers me when I invest passively to not have somebody available and answering the questions, or taking a week or two or more, or never answering an investor question. That's the part I enjoy, because if you know what you're doing and you're transparent, you can get back to investors quickly. So I like that part. And because of the people component, that's where the capital raising comes in. I'm on the calls in terms of the weekly calls, moving the business plan forward. That's where the rubber meets the road. And I can lead or not lead parts of it. It typically tends to be a little fluid, where I'll jump in and be like, okay, I'll take this one. We just ordered a whole bunch of laundry equipment for one property. It's not that I'm the main CapEx person. We actually have a guy with construction background doing that. But he, I think, was either traveling or doing something that day. And on that call, when we decided to replace all of our owned laundry equipment, I was like, okay, I'll run with that ball. So
Got it. So you originally had some single family, correct? And you still own those, don't you?
I got into apartments at a time when I had 30 single family rentals that I was self-managing in Houston, and I was pregnant and working full time. Yes, I was pregnant with our first child. This was in 2015, managing 30 single families on nights and weekends, and VP of my own company in commodity trading. So return on time and return on life. That's why.
Okay. Wow, that's incredible. So what is your 2023 looking for? Like, what's your game plan? Like, what's your current idea of where you're going to go or what to do?
So because you're familiar with Jesse Itzler, my Misogi for this year
aren't.
is
Can
not
you explain what that is?
Okay, so Misogi is your one big thing that happens in the year that defines your year. And as Jesse puts it, sometimes your Misogi chooses you, and that could be a personal thing where you've got a parent that falls ill or needs to be taken care of, or passes away, and then the things that come from that. In our case, we're very blessed. We're expecting our third child in a couple months, so that's my defining thing this year that I'm working around. But that's not making my money work harder. Not to the podcast, but from a financial perspective and apartment perspective, right now in the first half of the year, I'm maximizing liquidity. So that's my strategy. Even if I'm selling a property at a discount to what it was worth a year ago, if it still makes sense, and we rolled out our business plan and everything else, I'm selling. So so I'm in the process of selling a deal right now that we've owned for 4 years. So maximizing that liquidity, selling some of the single family that I've had for well over a decade. These are cash flowing, these are good, but I have some liquidity tied up there that I want to have standing by for when something comes up, which I don't know if it's going to be in the second half of this year or in the fourth quarter, but I do expect more deal flow to be happening this year. Right now it's pretty slim pickings. There's not a whole lot being marketed, brokered. The potential sellers are I think holding on as long as they possibly can, deferring a sale for as long as they can. But there are going to be pressures. I mean, they're natural pressures that are happening because of the Fed and the interest rate market, and the where people are at.
Where do you hold this, like as a personal finance question? Where are you holding your liquidity while it's waiting to be used? Is it just dying in a bank account, or do you have somewhere else that you can hold it?
No, well, it's some of it is like I still need to further optimize some of our held CapEx funds within some of the entities because that sits in cash, and when you've got a large number, that hurts just to see it sit day to day. I've worked on different options that are still relatively liquid, anywhere from 30 to 90 days. On the 30-day front, I'm able to get about a 5%. I think that's pretty good because you're balancing at least some return and what's considered liquidity from a balance sheet perspective. And if I'm willing to go up to 90 days, I'm getting closer to 10-11%.
What vehicles are those in?
Lending, and I've always done lending with, for example, my retirement accounts. I actually don't use any of them for real estate, and I've been doing.
So is this
lending.
fix and flippers, getting hard money loan? What's?
Yeah, it's so and again, it's relationships. I've met folks that I've loaned to on 4, 5, 6, 7. I mean, just rinse, repeat every time. They know me, I know them. So we have a standard thing going there. And then I got to the point where I had more available than they had deal flow. So I started looking at lending funds and found one that I was comfortable with, that had been
Okay.
around.
So it's a fund that basically does that at scale, that you can put your money in and out of.
Yes, and they lend to it's for the most part hard money loan terms, and they lend on either small apartments or fix and flips.
Great.
And their historical returns are around the 12% mark, and for the last couple of years, I've gotten close to 11%.
Those are cool.
And some change.
How do people find out about those? You said it's just relationship based, basically.
People, it's the daisy chain of what are you doing? Oh, well, I'm doing this. Oh, I'm doing that. Well, let me look into it. And if you're motivated enough, you actually follow through and pick up the phone or send the emails. And
yeah, for people that are listening, even if you don't want to do any of that, or you don't have the connections, at least put it in a money market fund or something. Money markets used to have a time duration, but they got rid of that. Surprisingly, I found out recently that at least go get 4%, something besides zero.
Well, you need to beat inflation. So
probably not beating true inflation, but at least it's not zero. I'm always surprised the amount of money I hear people have sitting in banks that is at zero. And it's like, and it's been there for years and years, and it's like, ouch! Like, do the math on how much that's costing you.
Yeah, you have to feel it burn, like the burn and the pain. I think if you're understanding money and how it works, every day that goes by that it's not doing something for you, your money needs a job, and that's not even my quote. The Newells are the ones that came up with it, where they said every dollar needs a job, and sometimes that job is just being liquid and sitting there. So because you need it for your balance sheet, for loan qualifications, whatever it is, but it has a job
exactly.
to it.
And I think it's partly just been the mindset for a lot of last 10, 12 years that inflation hasn't been a topic. Doesn't mean it wasn't there in a lower grade form, but it just, I think people was less aware that it was there until it kind of obviously exploded, and now everyone realizes that it was always there and now it's worse, and they probably should have been paying attention to it. It's interesting how sort of set it and forget it until something bigger happens. Okay, so we talked about that. You raise money from investors. What have you felt are some limiting beliefs investors have had, and like how do you work through those? Like so a lot of people aren't familiar with real estate investing and really doing any investing outside stocks and bonds. And when you first start looking into it, and even when you start talking to people about it, friends and family, they kind of act like you're investing with, the Russian mafia or something, just this odd anomaly thing that must be high risk. It's equivalent to crypto or something if it's not single family investing. So what have you found are some of the common things for like a first time multifamily investor, passive investor, they kind of run into mentally, they have to kind of become comfortable with in order to take the next step and feel that it's a good move and it's a good diversification of their money?
So I'm not in the business of educating people on apartments. There are plenty of other people that do that. So you can always point them in that direction if they're not already seeking out that knowledge and education. What I would say is when you're talking to an investor, you're always trying to learn about them, understand where they are on their journey, what their criteria, motivations, and such. So it's because it's personal. Investing is a personal, sensitive thing that's full of. There's a lot of emotions and a lot of fear involved. And when you're talking to them and realize, let's say that they're on the earlier, beginning of their journey, I wouldn't say my job is to eliminate those fears, but it's to at least empathize and remember what it was for me to make my first investment. So go back to the time in 2015, because that's when it was. It was 8 years ago when I wired that first amount of money, and the trepidation, the jumping off of a cliff. There it goes. Is it ever coming back? And sharing that and being in that state of mind when talking with them and sensitive about those feelings, and not having a conversation every time with an investor expecting them to invest. The conversation, at least for me, I'd like it to be a little bit more natural of a let's get to know each other, understand each other, and talk about where you're at, what I've done, and go from there. And if it does result in them feeling comfortable to invest, great. But ideally, we also got other things out of the conversation. I was able to help them with something else, or they were able to help me with something else. So going into those conversations with an open mind. I think you always hear people invest with folks that they know, like, and trust. That trust is not cheap, and it doesn't come quickly in a phone conversation or an email. People don't trust you because they've gotten 10 email blasts from you. They do because you're a person that they've either related to, connected with, and that you've put in the time to build that trust bridge. So if I can help somebody out by connecting them with somebody else, or with a lending fund that I happen to use, whatever it is, I try to do that, because then we'll walk away from that exchange. Ideally, the most effective is in person. I don't like Zoom. I think you need like 7 or 8 Zoom calls for the same effect in person. And I still talk to a lot of people also on the phone. But you walk away from that conversation remembering the other person, and remembering them maybe not necessarily for just the fact that they might be active in the apartment space, so that when there is an investment opportunity, it's not something that's in a vacuum. There's a relationship and trust that's been built, and the fastest way of building that trust is doing right by them on their first investment. So that first investment has so many emotions and things tied to it. Communication, transparency throughout the process, and meeting or exceeding what you promised to them. I mean, that's when it's like wildfire compounding growth, because you've got somebody that's happy about what they've achieved. When you're raising capital the next time around, all of those repeat investors are pretty much the first wires that you get, like same day or next day. So it's that easiest tranche of capital. I know we're getting into some of the nuts and bolts, but beyond that, they're also the ones that go, you know what, I have this person I used to work with, or this guy that owns these car dealerships, and he's really busy, he hasn't had the time to look at, but he really wants to get into. Can you talk to him? And so they start referring you, and those are so powerful because they're already somebody that's experienced the process of investing and gotten to the point where they're comfortable, and it's no longer me going, hey, I think this is something that might be a fit for you, and this is why. It's a warm recommendation from somebody that they already know and have a relationship with.
Okay, I had to jump in here real quick. I hope you're loving this interview as much as I am. To get all our content and stay up to date, make sure you follow us on social media under Brian_O'Neill_investor on Facebook and Instagram. And also remember to follow this podcast if you're listening to an audio. And if you're on YouTube watching the video, make sure you subscribe to this channel. Okay, back to the interview. Yeah, if it worked for your friend, you trust your friend, you know how they think, and then it sort of moves you past that first worry of, is this a salesman, or is this someone that, they've delivered for my friend, they've met their promise. And it's really, a lot of business relationships are like that. If you think anywhere you go, you meet someone that you go to buy a car and you have a great experience, and then it meets your expectations. They take care of you like they said they were going to do, and they didn't hassle you or change the price. Like, you're going to tell someone else, oh, that's a good place to go. And you go to a restaurant for the first time and you enjoy it and they're nice, and you meet the owner and they meet and deliver or exceed the expectations. You're going to go back. You're going to do more business with them. You're going to tell people about it. It's really the basic fundamentals of almost any business. It just happens to be the product is an investment as opposed to a physical thing maybe you get, or a service. But the philosophy behind it is almost the same. And it's interesting. Yeah.
It's simple. It's simple, but you'd be surprised how many people
having invested a lot recently, I can tell you that not everyone delivers on even the basics. I mean, the investment may deliver, but just the business side of it, the communication side of it, the follow through, the acknowledgement of, I just wired you a 6-figure number and I haven't heard anything since then. Like, what does that person feel like? And it's my first relationship with you. And I know you do a meetup group. For me personally, as an investor, feeling most comfortable out investing in real estate, because that's something that's newer for me in the last few years. It's just being in rooms around other people that are doing it, and not feel like I'm alone, like feeling, oh, this is what this person, this is how they do it. They've been doing it for 10 years. You don't feel as alone in the process, even if you're sitting in a room full of nothing but passive investors. So just getting around the people that do it.
Yeah. I mean, I started the meetup in 2017, and I halted it during COVID. I mean, my wife, like yours, is a nurse, so we did the quarantine thing and all that fun stuff. But the meetup thing was great from so many perspectives. I'm not a public speaker or somebody that enjoys being in front of people talking. So it was a growth thing for me. It was one of those, okay, I don't like to do it, so therefore I must push myself to do it. And I think a lot of folks shy away from it because they go, well, I don't have enough experience. to put myself out there. I don't have the resume to, for it to be worth people's time. And I think especially since COVID, people are leaving their house less to go do these types of things than they used to. There's a little bit more of a barrier, but it was so powerful to be repeatedly doing something every month consistently, having folks able to come up to me and ask questions and build that relationship, invest in repeat interactions so that the trust is there. And sometimes it takes an investor a couple months on the low end. It can take years for other folks to wrap their, not just their brain around, but their risk appetite. I mean, and some people's risk appetite will never be, apartments, and that's okay too. But having the patience and understanding the power in being consistent about those interactions with people, being consistent about what it is that you do. And the meetup is a platform to communicate that and connect with people. And after I moved, I stopped it because my meetup base is in Houston. And last year, I recommitted to it. So every month, I drive down 4.5 hours for the meetup. And people think I'm crazy. My wife's like, is it this week again? I'm like, yep. And I spend the night because I did it last month. I actually drove back the same day, but it's powerful in that folks that are 20 minutes, 15 minutes away from the meetup venue, when they start questioning, going, oh, I don't know if I'm going to come. They've told me this because they've shared that they're reminded, they're like, wait, Natalie's driving 4.5 hours to be here. If she can do that, I can drive 20 minutes and show up. So I got these folks going, I'm here because I know you're making the effort to be here. And I didn't think about that as
they
leverage.
Also probably have a connection with you.
But so. It works. Yeah. Well, I mean, if you see somebody, on a monthly basis and you're honest and interactive and everything else, yes, there is a connection. And I want to leave those every time, deepening the connections, making new connections. That's the whole point. My problem is that core group or audience is almost 5 hours away now, but it's still worth something to me.
Yeah, it's good to get in front of people and just have a personal connection. Yeah. So
it's very old school. It's not high velocity in terms of
internet marketing. Yeah.
Growing an investor database. So I don't have a website. I don't have I don't have a funnel. I don't have all of the things that you would typically associate with folks in the capital raising space, because I've done it more slowly, organically. If I'm wanting to do bigger deals, I'm probably going to need all those things. So those are on my goal or horizon for the future, because it does systematize and return on time. Getting back to that return on my life, but it does systematize things and makes it easier. But I haven't gone that route, and I've done what I've done.
That's impressive.
Without that,
to do it just. I don't want to call it the old school way, but there's so many people leveraging Facebook ads and all these funnels and VAs in the Philippines doing mass phone calls, and you're out there driving 4.5 hours, meeting people in person and making connections to. I'm sure your investors have a very good bond and connection with you because of that, though. So there's something to be said about that.
Yeah, and they know that if they text or call me, I'm going to answer, and I'm not going to not give them exactly what it is that we're doing, the good news, the mediocre, and sometimes the not so good news. I think where people might fail or trip up, I don't want to say fail, what might get tripped up is not fully appreciating the privilege of running a company or being an owner and stewarding investors' money. That's a huge privilege. And when you've owned a business, and not all businesses succeed, there's a different thinking that has to happen and you have to mature into that and think that way to, basically you're serving your customers. It's customers first. I mean, it's business 101, but your customers are more than just your residents. It's your residents, your investors. You're working, for them in a way. Yes, you might have worked yourself out of a job, but you better enjoy that new job of serving residents and investors. Otherwise, how long are you going to be able to sustain doing this and being happy doing
if you're in it for just the money, almost any business, you're not gonna do very well for a long time or make people happy, and especially in a business that requires connections and relationships.
Yeah. No, and when we built our physical commodity trading company, two of us left ExxonMobil together, and it was, okay, here we go. We've got 2 phones, 2 computers, and one of those like shared office incubator spaces was what we were using at the time. And our customers were major oil companies: Shell, Valero, Chevron. ExxonMobil doesn't give you business when you leave ExxonMobil, so they weren't one of our customers starting out. But you're working with all these major oil companies as customers. And it's like, how do you distinguish yourself? You're nobody. You're a brand new company. You've been in existence for a couple months. Why would they, do business with you? And it was all reputation. It was all do what you say you're going to do. Even if there's a case of what's called a force majeure, a hurricane event in the Gulf Coast, and you've promised to deliver X number of barrels by X date, and you can't get them out of the facility where those barrels are, you truck them down from, and we were talking about Oklahoma. In this case, we truck them out of Oklahoma down to the Texas Gulf Coast. It cost us more money to do that. We lost money and margin on that trade, but we delivered on what we promised to deliver on contractually. And the relationship was so positively impacted by that, act of trucking down, these barrels from Oklahoma, that we got more business from that later. And, our reputation was solidified. And that's how you build a business. That's how you build a company. And it's the simple stuff. But when you don't just hear it in quotes or hear it on a podcast, but internalize it and embody it, it's so powerful. But it takes putting your customer, who you're serving, first, and understanding that you're in business because of them.
Well, that's the kind of stuff you want to hear from someone you invest with. So that's for sure.
Yeah, but I like to give the example because it's a general business one, and the example I gave wasn't even an apartment one, but it's one that I remember because it felt like the right decision the whole way. When something's aligned and you don't feel like you're having to fight yourself through the process.
It's doing the right thing, basically. So in regards to oil and gas, if I can ask you a few oil and gas questions. I know you said you are not commodity expert anymore, but it sounds like you do some small investing outside real estate, correct, in oil and gas. What's your crystal ball? I think you said are you bullish or bearish on the oil market? Because oil and gas is another thing that you can invest in outside the stock market, just like real estate, that has become fairly popular. Not popular, but in the news, I guess you'd say, in the last few years.
Well, it's another tax-advantaged investment, and folks are chasing yield and chasing tax advantages. So if there's, if you can get both there, then that's going to be naturally on a radar screen. While my experience has been midstream to downstream activity and primarily in operations and logistics, if I think about the pressures of recession and all of those things, my general view on crude oil is bearish. I expect it to go down. Fluctuates a lot with the U.S. dollar and the value of the U.S. dollar, so those two are intimately connected as well. Again, I don't have a crystal ball or more necessarily more knowledge than the next person, and there's plenty of analysts that do this for a living. I've chosen to invest, and I made this investment last year on a drilling opportunity in the Permian Basin. It's small, and that was also relationship based, where I knew the cast of characters, if you will, and my brother-in-law had been invested with them for a few years and done well. So again, referral connections. They're not too far away. Not that I've been to their house, but I could if I wanted to. I guess there's quotes that I try to fit into every podcast, and if I haven't already said this one, I'm going to say it now. That business is done through and with people. And I truly, truly believe that. So it's the people component first. When folks ask what your favorite part is about whatever it is you're doing, my answer, and it's cheesy, and sometimes I get an eye roll, but it is the people. And I'm not saying that to serve myself or to forward an agenda. It's truly the way I feel.
Yeah, I was also introduced to oil and gas through someone. Originally, it was the tax advantages of it. And for people that aren't familiar with it, the tax code is favorable if you are invested a certain way into oil and gas exploration or development, where you can typically consult your CPA, offset some of your active W-2 income or income that normally can't be sort of washed with a paper loss. You can do with oil and gas. So that's what originally attracted me to it. And then obviously there's the ups and downs of the oil market. When things do well, your investment does great. Oil prices go down too far, that check may get smaller. I thought the risk return was worth it, especially considering the tax savings. My return doesn't need to be great on that investment when you factor in the taxes. So I figure my risk is a little lower than a different investment that doesn't have the tax advantages.
Yeah, you have to look at the whole picture.
Yeah,
Risk
taxes has
adjusted
been a
return.
big thing on my radar the last 3 or 4 years, when that's sort of the peak of my businesses. I really started to realize how you can plan for taxes a lot better by changing your advisors, changing your investments, things like that, which no one ever told me about. A lot of people around me didn't.
Oh, I had a big taxable event in 2017, and pretty much that year is when I formally became a real estate professional by the IRS definition. And since that year, that tax year, so 17, I haven't paid taxes. But it's this giant optimization dance. There's more art than there is science to it because of the number of also passive investments I have. So I don't control those particular K1s, but just trying to balance all the activities so that you come in right, kind of where you
It's kind of
want to be. And it feels like a game, and it's one that motivates and excites me because
it is like you're trying to predict the
balancing
year,
act
trying to predict all the flows of money and taxes, and then learn from the newest, the people, what the current tax code allows you to do, and it's just sort of this massage of numbers and how you make things work to maximize your taxes, basically. If you have the time. I think it's really a time thing too. Mm-hmm. Like I was so absorbed in my businesses and jobs, or people that have kids and W-2s. It takes time to figure that out, and like you can pay people to do it for you if you find the right ones, but it's hard to find the right ones, honestly.
So I'll walk you through my thinking and part of the motivation to leave and not have a W-2. So I've been retired from a W-2 or 9-to-5 since 2000. It's how much will I be making if I optimize that? And that was where I was like, am I going to be making more than a typical salary or really growing a business if I take the time to put the time in to do that? And the answer was yes, and that made the decision easy. So in trading, you're always looking for arbitrage. You're looking for that price differential. So that was a time. My time was going to be well spent focusing on that. So that's what I needed to do. But you're always chasing. I mean, we're all arbitrage chasers in everything that we're doing. That's why we have VAs. That's why we look at, okay, is this a $10 an hour or $15 an hour job? That's going to liberate me to do something higher level? Is this 140 a door property something I can take to 170 or 200,000 a door in a 5-year time frame, and what does that business plan look like? And
You've mentioned VAs. It's funny. I just hired yesterday my 2 first VAs. I've always been a do it.
congratulations. I don't
Always been a
have
do it
any anymore.
yourself, learn how to do it yourself kind of guy. Now I really am trying to turn a new leaf and figure out how to hire the who not how book I've read twice. It's like, okay, I need to do this. The audiobook's pretty good too, because they read a chapter and they do an interview with the author and read a chapter and interview. So it's kind of like a podcast book mix, if anyone's ever interested in that. So I guess I just want to wrap it up on something that we talked about offline before we started the podcast, of your concept of return on life. And we sort of related it to the Harder Working Money podcast name. And you were mentioning that return on life is sort of a next step concept on that theory.
Yeah. So when you think about making your money work harder, then it boils down to, okay, why? And it needs to be tied to purpose and your life, so to speak. And you need to be doing it for that purpose in order to stay motivated, and that can be different things to different people. Whether your goal is to start and grow a charity, whether it's related to your family and kids, whether it's about having more of those experience with the people that you love. I think life does boil down to growing as a person, and giving. And then it's, how does your money enable you to do more of that? I want to be able to give, be more available of myself to my family. And I've always, you talk ROI in the business, whether you're looking at apartment investments, companies, oil and gas investments, it's all ROI, EBITDA, valuations. For a very long time, I would talk about return on time, because that time component and the urgency was something I really felt the pressure of. When I started, I had 30 rental properties, pregnant, working full-time as a VP, so that return on my time, because there wasn't a whole lot of it, was so crucial. And then I had a conversation last year with Julie Roy, and we really I think we talked for 2 hours, but we really connected on that return on time concept. And she corrected me and called it return on life. And that completely resonated. It's like, why are we here? Why are we here doing what it is we're doing in our lives? And how can we maximize that? And that ties into, keynote speakers like Ed Milet and others, maxing out your life, doing the most you can with this very precious thing called life that we have. And keeping that sense of urgency, and having that urgency push you towards action, I think is crucial. Wherever that urgency comes from, and it can come from different
yeah, it's very
places,
good, because like
people.
Harder Working Money, I started this podcast. It's not about making more money at all. And at first, it was about how to make that money, giving my time back. But really, the time isn't the end result. It's, I want to have experiences with my kids. I don't want our life running past us while we're making money. And getting the time back then is the next step of allowing me to, or allowing anyone that wants to focus on that aspect of their life, to open up and be able to spend time doing a charity if that's what you want to spend your life doing. And if you want to travel with kids or do a hobby or whatever life is to you, how can you get your money to help you achieve that? So it's not the money that allows you to do it. It's what freeing yourself from your life basically is just to produce money and nothing's left. Like, that's not a way to live. You don't need money if all you have.
The money doesn't do anything. The money doesn't do anything for you on its own. It really doesn't. And it's usually people that have it, that say that and all that. But it is. I like that if we go, in the wintertime. I grew up in Switzerland. I am fortunate enough to be a skier. I want our kids to experience and know how to ski. So our 4-year-old has done 2 years worth of ski lessons in the winter. A 7-year-old went down blue slopes with me this winter. That means something to me. They're growing, they're learning a new skill, but it's also one that I grew up with, so I have a personal connection to, and to be able to share that with them, and also be physically able to, and not taking my physical ability to be skiing for granted either. And we ski in a resort called Winter Park, where they actually have, I think, one of the world premier handicap skiing programs. So you're skiing down slopes with people that would normally be in wheelchairs, that are blind. That's also part of the experience that our kids get to
and they're
see.
flying,
and I think that's
sometimes
wonderful
too. Like I see some people like, how are you?
Well, they're fearless, but their center of gravity is lower, and my son's idea of going down the slope, it's like, let me do it backwards, and that net caught me the first time, so I'm going to do it again.
That's awesome.
But that's life. That's life, right? And that's why we do what we do. And yes, it costs money to do that, and
you need the time and you need the money, and you can't do it if all you're doing is trading time for money. That you always hear that phrase, but you have to find a different way. So that's what the goal here is.
And then I did want to share something personal, and it's not something that it's not something that I normally talk about, but when I was mentioning urgency earlier, and not taking, again, your ability to do something for granted, I've had a pacemaker for over 12 years because my heart stops. And it took several years to figure out that it was cardiac, and that it was, in my case, my natural pacemaker not working. And once we figured it out, I stopped driving because my heart would just stop. And that's life. You don't know whether or not you have tomorrow. You don't know whether or not. So do everything that you can to maximize it. I mean, I'm very lucky that they figured out what it was, and that it was an established, simple fix. That pacemaker's already been changed out, because with my condition, it lasts about 8 or 9 years. But the year I got my pacemaker, I ran a half marathon because I could, and I felt the pressure of I'm medically able. I've got this gift of being able to keep doing what I'm doing, and I'm going to keep running with it and keep doing.
You experience having it taken away.
I don't know about what's next. Yes, I experience collapsing on a regular basis, more and more regularly, because of SA node dysfunction. But and my last time I did, I mean, my wife's a nurse. She had to chest rub me, and I came out of it. And normally, it's like I immediately know where, get right back into it. And it took something out of me the last time. And fortunately, I was on a ambulatory monitor. And I'm sorry, this is going to like medical stuff. But yeah, I mean, I have, I don't know, it's surgery, but yeah, I've got a pacemaker in.
So change your perspective for sure. Yeah.
It does. And don't wait for something like that to happen. Find the leverage that it takes for you personally to feel that sense of urgency, and feel that appreciation for your life. I mean, I married somebody that is not financially oriented, and is the polar opposite of me, because that works. A bad day for me might be losing money, but at the end of the day, that pales in comparison to a bad day for her. Level 1 shock trauma ICU. She's a nurse. Half the patients might not make it. You're dealing with life and death. Not just that, you're dealing with the family members. And you just have a completely different perspective, and that perspective balances me out, because I'm I think a better person, investor, mom, daughter, sister than I would be otherwise, because trying to keep that perspective in front of
Yeah,
me.
it's definitely something I've started to experience having kids, and I don't know, turning 40 and starting to, seeing my seeing my
We're the
parents'
same
age
age.
and
We're
things
the
like
same
that.
age.
It's like, wow. I remember my dad turned 40, and I thought he was like super old. Someone explained it to me when I was little, like, what does over the hill mean? It's like, oh, he's halfway to being dead. It's like, as a little kid, I was like, oh, that's just like ancient. And I'm like, well, I remember that thought of looking at my dad on his 40th, and like, I'm there now. And it's an interesting perspective to be. Well, that was an awesome interview. I super appreciate you coming on. If people want to get to know more about you, any social media, website, email, I can put in the show notes.
So yeah, I'm Nathalie DVB because the last name is so long. So Nathalie and then DVB on Facebook. You can reach me there. Otherwise, I'm on LinkedIn with my full last name, and then my email is my first initial last name at gmail.com. I don't have, like I said, anything fancy, or it's up there, and you're welcome to share my
Awesome.
contact
Well, thanks for coming
information.
on, Nathalie.
Thanks for your time, Brian.